Okay, cool. So yeah, everyone, gonna be doing the entries Zoom again, to go over it one more time to fully ingrain it into your brains. Any questions, anything that have been come about like during the past like few weeks, I'm gonna go through them now. Get more clarity on things, more simplification, just to like get it proper nailed down into everyone's like brain, right? Our best way to do that is to I'm gonna do the my Picasso drawings. Don't judge. Got some done some lessons for you guys, like some drawing lessons. But like yeah, obviously go through each entry model. We got 3 entry models to go through. So entry model 1, entry model 2, entry model 3, and I'm gonna go through the different like the break even criterias, the rulings for that. There's 2 ways to go break even. And then yeah, in terms of entry model 1, go through like the 5 in it, like when it becomes valid, when it becomes invalid, etc, etc. And then yeah, show you some examples of all 3 of these. Okay, so let's do that. Okay, cool. Hold on. Order flow range is unmatched. Sick. Okay, so yeah, let's start with here. Okay, entry model 1. I'm gonna just go through like the overview first, right, before I actually show you examples. Okay. Entry model 2, entry model 3. Okay. Everyone can see my screen, right? Everyone's all good, sizing wise, everything cool?
Yep.
Yes, sir.
Okay, sick. So let's separate
Go.
this. Uh, sick. Okay, so entry model 1. Okay, literally this is the one where like over the period of time has shown to be literally the best strike rate, has the best strike rate. It's so funny. Like, it's the one where literally there's no liquidity concepts involved. There's no like structure involved. It's just order flow and high time frame POI. Okay. And this one is the one that has the high strike rate. I think at the moment it's like 68% strike rate with 10R full volume trades, 1% risk, which is like insane. Like I've never seen that in my life as well, but like on like SMC concepts, because SMC, like everyone's always like looking at trying to take like 10 losses before a win, trying to like be in the most smallest 5-second entries and just random trades, like prices melting down, trying to buy it from here, prices going to the sky and trying to sell it from there when it's just flying. Like SMC, like it's just known to have like the worst strike rates, because everyone's trying to just swing for like $100 and stuff like that, and then trying to be as precise as possible. Like there's too much predictions, too much guesswork going on, which then leads to like gambling basically. Bad mindsets as well. It increases your like the addiction, gambling, and impatience, and no discipline. So I love this entry model 1. Like it really helps you with your discipline as well and patience, because you're just like having your high time frame POIs marked up and waiting patiently for that to happen. For example, let's say we have like a 4-hour, bullish order flow range just like this, and we get like a 4-hour POR just like this, which could be the extreme of the range. It could be an SD flip of the range, like could be something like this. Let's just make it simple and just say like, okay, it's a 4-hour demand zone, right? And simply like the 5-minute, simply now this entry model 1, all it is simply is waiting patiently for price to come down into this 4-hour POI. So it has to mitigate this 4-hour POI, okay? It can't just be above it, it can't be past it. Once it's broken this zone, the zone is invalidated, yeah? Like your stop loss, if your stop loss was here and the price goes past the stop loss, what's gonna happen? It's gonna hit your stop loss, yeah? So same as this POR, this point of interest, this demand zone is fully invalidated if price goes past it. So when it's gone past, you just delete this zone, yeah? And then you work on the next POI, okay? So price has to mitigate this POI, and then we jump onto the 5-minute time frame. So then the 5-minute time frame, right? So all this time price is coming down. There's no purpose to even look at the chart. There's no purpose to even be on charts or looking at the 1-minute time frame, looking at the 15 seconds, coming down, like taking 10 years. There's no purpose, right? Put your alert right here on the zone, right? And then you can come onto onto your charts, onto your computer, and then jump onto the 5-minute. And simply the 5-minute has to just give you a 5-minute chalk. So it has to take out a low, take out the high, right? And this 5-minute has to always be aligned bullish, right? So it can't be ever against you when you're trying to take a trade. Okay, so if you're trying to buy it, the 5-minute always has to be bullish. Okay, so let's just imagine that this is like a 4-hour, and these trades can be taken counter trend and pro trend 4-hour. So I'm just showing you this example, but even if it was like up here, counter trend of 4-hour, you can still take a sell. Okay, so let's just talk about this one. It's pro trend, but it doesn't matter. Either way, they both are fine. Okay, so let's say, okay, 4 hours bullish, we come into 4-hour zone, we get this 5-minute chop bullish, right? And you see how what I'm saying is like this 5-minute always has to be bullish for you to take an entry, right? It can't go from bullish again back to bearish and then trying to enter here. No, you can't do that because now 5-minute is bearish, right? Always make sure that the 5-minute is aligned bullish, right? The reason why is because, like, we need things in our favor, right? We need all the flow in our favor. If you're against everything, if you're against the flow and you're trying to buy it and it keeps going down, you're trying to buy it, what do you think is going to happen to your strike rate? It's going to be completely messed up, right? It's going to be completely fucked up because, you're trying to go against the wave, against the flow of the market. The sell orders are more powerful. The supply is more powerful. You're trying to buy against this powerful supply. Like, it's just not worth it, man. So yeah, be smart about your decision. For me to risk 1%, I don't want to be risking 1% of like a million or 100K or anything, 10K or 1K. I don't want to do that. If I'm against things, if I'm against the market, man, why would you want to be against the market? Yeah, our main job is to be having all the confluences that we can to be with the market, to be with the flow, right? So obviously, in terms of like 5-minute, yeah, always make sure it's aligned. Make sure you get your premium and discount tool from the low to the high, right? Just like this. I'll talk about the 70% rule for this later as well, okay? But in terms of like a simple entry model on the 5-minute, you have your 4-hour POI, 5-minute bullish chop. Then you find your 1-minute POIs from here, right? Inside of this 5-minute range. So like, let's say we've got 1-minute POI here. Let's say we have another one like here, right? Below the equilibrium, right? Below the 50%. The 50%, okay, just showing us the discount and the premium of the range. So make sure that, like, we always are entering from the discount of the range, right? And not trying to buy from here, okay? Just like, simple, foundational rule of like business is to buy low and sell high. So we want to, follow the same principle of like buying low, selling high, buying at cheap pricing, and then selling at high pricing, expensive pricing. Yeah? So what we should be doing is this. Now, when we have your 1-minute PYs marked up, and these could be, again, like a SD flip, it could be an extreme of the range, it could be a liquidity sweep, which usually is an extreme of the range anyways. Usually this low has like swept liquidity before V-shaped recovery and then taken out the highs or supply. And then what we can do then is simply wait for price to come into this POI or this POI, right? For us to look for a 15-second entry. Yeah, the POIs can be at the 1-minute to the 5-minute time frames, and I'll make sure that the POIs are like below, are like below 5 pips, but 4 pips. I want to make sure it's around 4 pips. No less than. No more than like 4 pips or so. Yeah, like I want to make sure it's like less than or less than 4 pips, because when the POI is too big, right? You don't like for you to jump on a 15 seconds on a POI that's huge. 1 second. Yeah, I got family over here, you know. But in terms of, like I said, in terms of how to get in on this trade, for you to look for a POI, make sure that the POI is not huge. Like, because imagine trying to enter a 15-second chalk on a 4-hour POI. You would not do that. Yeah, you would not do that. So if you think about it the same way, it's like you don't want to be entering where there's too much potential of a 15-second chuck in about 10 times in a 4-hour POI. You don't want to do that then, right? You want to make sure that you're entering a precise POI, the one where it's only going to give you like, one chuck or maximum like 2 chucks in a 15 seconds, because you don't want to be opening yourself up to like 100 different opportunities, right? You don't want to do that. You wanna just see a few opportunities in a day, maybe 1 or 2, and then that's it. You can risk your 1% under, win or lose or break even, and that's it. Move on to next day. You keep doing this with the same discipline and same set of rules, you'll be chilling, honestly. And it really shows how professional you are of a trader. Okay, so literally all we're doing now is simply waiting for that 1 minute POI to get triggered. We tap in to mitigate it. We give you we get a 15-second chuck, right? And then we just simply take the trade off a 15-second chuck. So simple. But just again, making sure that the 15-second is always aligned with your entry, because you see how sometimes what can happen is this 15-second. What can happen is you see how we get this 15-second chuck here, right? And it's bullish, like aligned bullish. But sometimes, right, you get a 15-second chuck like this, but then to get back into here, it like has to chuck again bearish to get back in, right? Or like, sometimes you get a 15-second chuck like this, right? And then for it to get back into here, like it has to chuck this low, right? Break this low that flipped and broke that range, right? It has to chuck in a 15 seconds to get back into here. So I will not enter here, right? Again, I will wait for 15 seconds to be aligned bullish for me to ever enter, right? This rule alone for the 15-second chuck being aligned in your favor has saved like hundreds of losses. Like, it's crazy how your strike rate will increase massively just from this one simple thing. Having a 15-second, again, like it's the same rule as the 5-minute. Having the order flow aligned with your favor is so much more high probable than having the order flow being like bearish and you trying to buy from here, right? Where it can continue bearish. Same like this, it could just chuck this low and continue bearish, and it has done this a lot of times. And that's when you will see a lot of losses being avoided by simply following this rule, okay? I love how professional this is, real elite trading. Yeah, I mean, I believe there is a professional way to approach the markets like this. Like, the other methods that we used to use before, everyone used to trade just very, very aggressively all the time and getting clapped like 100 times. I've seen, I heard everyone blowing accounts like left, right, center, like, 10 accounts a day or something, like just easily from gambling, innit? Like taking stupid trades. So just having this patience is the real way, I believe, of trading. Is like, that's literally how I progressed so fast, and loads of people have progressed so fast. Is because of just following a simple set of rules like this, and yeah, like simply executing flawlessly every time. Like I said here, executing flawlessly, execute your plan flawless every single time. The same. Don't change your variables all the time. Don't change your risk and stuff. Making sure you have the same TP, same target, same. Your stop loss is protected. Your break even. You know what to do. Like, make sure it's all the same every single time, right? If you have any questions, just write them down on paper or something so you don't forget, so I can like go through them at the end, okay? Just so that I don't like stop and pause every time. So again, 15 second is bullish aligned, right? And then we enter in the discount, right? Making sure that if this is a 15-second chuck, we enter below the 50%. If I'll show you the other criteria now, which is the 70% rule, okay? So let's talk about this right now. 70%. So when you're drawing your premium discount, right, you draw it from the low to the high if you're bullish, and then you draw it from the high to the low if you are bearish, right? From here to here. So you see how the 70% is now the bottom and the 70% at the top, right? So now this, let's talk about, okay, 5-minute is bearish here, 5-minute is bullish here, right? So now this is a very important thing right here, is that like when you have price, right, bullish, what's the expectation order flow for it to make a new high, isn't it? So then for the price to, come into discount and then not put in a new high, shouldn't that like kind of give you mixed feelings of mixed thoughts about this, right? It kind of gives you them ideas that, oh, like, so why is price failing to actually follow its expectation order flow to do this? Why? Maybe it doesn't want to go higher. Maybe the demand is weak. It doesn't really have enough power to actually push price higher and take out like supply, take out highs, right? So maybe this could happen. Yeah. So then for you to avoid like this happening and you trying to take a buy from here and here, right, taking two losses, which I've seen happen so often, right? So for you to avoid this, the simple rule I can explain it to you in this way is that if price comes into the discount equilibrium, right, and then fails to put in a new high, meaning like at least push up to 70%, which is over here, right? At least push away to 70% to attempt to break the high, right? Make an attempt to break the high, but then it fails to do so, right? And it comes back down. Right? It fails to take out this high over here, and then it comes back down, right? So then what we can do now, instead of using a 15-second chock, delete these POIs, right, on the 1 minute, and now simply wait for a 1 minute chock instead first, okay? We need a bit extra confirmation, a bit of a high time frame chock instead of a 15-second chock, okay? Wait for that bit of a high time frame chock. It will save you so many losses again, like loads. So here in the discount, wait for it to give you a 1 minute chock first. And then we can play the 15-second chock rule, right? And then we can be like, okay, can we just enter from here straight away if this 1 minute range and the 15-second, range is the same? Can we just simply enter? If it's the same, we can just enter this trade, take it like this, no problem. Stop loss below the low, right? But if the 15-second, has to chock again bearish to get back into here, what do we wait for? Simply 15-second to realign bullish before taking that trade again. Yeah. So this is the key rule, is always making sure 50 seconds are aligned bullish for you to trade. Because whenever it's against you, then like you can take a lot of losses, right? So do you understand how simple like I made this? Yeah, is like 5 minute, impulse, pulls back, retraces, pushes away, attempts to take out a high, but fails to do so and pushes back into the range. Pushes back into the discount, gives you a 1 minute chop, right, to take longs. Then we have to just get a 1 minute POI, find out if the 15-second is already bullish with the 1 minute. If not, then we have to wait for that 15-second to go bullish. And then we take the trade from there. Okay. So let's just repeat it from the bearish side, like the opposite side. It's 5 minutes bearish and we mitigate the 50% or higher, right? Then we push away, right, into, again, past the 70% or 70%, pushes away, and then it comes back into the premium. So again, you don't have any 1 minute POIs anymore because of this, because of what happened, right? And instead, what we do is we just simply wait for another 1 minute chop first, and then take it from here, right, as a 1 minute POI, 15-second, making sure that it's aligned already, and then we take the trade. Yeah, so that's it. Sometimes, waiting for this rule, like I said, if it doesn't show a 1 minute chop, sometimes it just continues to do this. I've seen this happen a lot of times. So like I said on last Zoom call, it's all about patterns. It's like, literally a trader can just be the best trader literally from just following a set of patterns. Yeah. Like you don't need to know like all the fundamentals. You don't need to know like, what's the news doing, or like what's the BFIs thinking right now, and like all this extra stuff. You don't need to like even know all that. Literally, if you keep things so simple and systematic and just like rule based and pattern based, because that's all we are trading, is all patterns. This is a pattern, this is a pattern, right? So, like that's all it is. So this is entry model 1. I'm gonna go through like the rules about like when it's invalidated and all that stuff right now. So let's talk about this. Let's just imagine, right, this is happening, and we get, let's just say we got like a 4-hour POI again. Okay, so now let me just explain to you, like, when does this 5 minute entry model 1 become invalidated? Like, when can we stop taking it? Like, because when, like, it's easy to know like when you can take it is when we mitigated the POI. Yeah, when we mitigated this POI, obviously we can just take the 5 minute chop, right? But then sometimes it does this instead, right? So the rule about this is like 5 minute coming down bearish. Okay, and yeah, we mitigated the POI, but we didn't break the first time. Okay, if we did break first time, then yeah, we can just play this 1 minute POI, 15-second chop. Yeah, But if we didn't break the first time and we just continue to put in lower lows inside this range, right? And just imagine this is all 5 minute only, yeah? 15 minute is like far away, right? It's just not nowhere like the same as this, right? So 5 minute does this chalk, like let's say it's really low down here. Okay, we can take this entry, simple 5 minute chalk entry from here. Again, we are still in this 4-hour zone, okay? And then we can take, I'm not taking any of these cells, by the way, okay? Like these are not in any 4-hour POI, yeah? I'm not taking these cells in the 5 minute, but when it taps into this 4-hour demand zone, I can take this buy from here, from this entry here. And then again, 5 minute breaks, continuation, right? Again, take this trade. Again, breaks again, continuation. I can take this trade, yeah? And again, this is like a 15 minute is like up here somewhere. 15 minute range is up here, right? Let's say it's up here, okay? So we can take this trade. So let's just draw it out. Let's just imagine that this is a whole 15 minute range. This is a whole 15 minute range, just like this. High and low, okay? So it's like pretty far out, right? So we can continue taking these 5 minute breaks, bullish order flow, bullish order flow ranges, keep taking these, right? Because we are still in this 4-hour zone, okay? And again, like this one, we have pushed out, but still, like we are still in this 4-hour zone, right? You know, you see how it's like still literally the old, like this entry, the POI, everything will still be in this zone. Once it's fully outside and like, you know, you can't get an entry anymore in the 4-hour POI, like here, then this is invalidated now, right? This like this entry from here is invalid, right? Because it's no longer in this 4-hour zone. You see, it's outside now, right? Like the one where obviously if it was really close, just like this, right? I'll still be looking to take that trade, right? Just because like we're still right above it, like that's fine. But like I said to you, like once it's now outside of the whole zone and like it's gone, right? I'm not taking any trades from here. Yeah, I'm not taking any trades from here. I'm just gonna simply wait for the 15-minute chalk or something now instead. Yeah, because I can't play 5 minute anymore because it's outside of the zone. It's no longer anywhere near the POI anymore, right? So you know I'm not taking these. Yeah. So this is the first rule. So make sure if you have your pen and paper and stuff, make sure you're writing things down. Okay. Make sure you're writing questions down as well. I'm gonna go through them like at the end. Okay. So this is the first one, and then let's talk about a different scenario because we have a couple of scenarios that could happen, and this could happen when you get like a price coming down. So let's imagine now, right? This to this, right, is a 15-minute range, but it's also a 5-minute range at the same time, right? Like both of these, this range over here is literally the same, okay? This is literally the same. So this high from here to this low, the 15-minute and the 5-minute is the same range. Or like, yeah, it's both like aligned as well, right? Like it's the same range, both aligned, and simply if we break this high over here, we have broken 15-minute and the 5-minute chalk. Do you understand? Yeah, obviously I'll record it and you can rewatch it. I'm gonna upload it onto the website, okay? So yeah, this is gonna be 15-minute chalk as well as a 5-minute chalk at the same time, yeah? But what we can do is, because like I said, we have mitigated the 4-hour POI, and if this is a 5-minute chalk as well, 5-minute range, we can still play that. Just imagine that this is a 5-minute at the moment of time. Just imagine, okay, we have a 5-minute chalk, that's what we want to see. You know, you get your 1-minute POIs and then you play a 15-second chalk from here, okay? One thing as well people do is like they use this one range and just because it's the same as like a 15-second, 1-minute, 5-minute range, and they'll be like, yeah, we can just simply like the question like rather, you know, can we just enter from here if it's the same, like looking to the left, like if this is the whole same range, like as like this is a 1-minute, 15 seconds and a 5-minute range, can we just put like a limit order or something? No, like the whole point of the entry model is 5-minute range, right? 1-minute POI and then 15-second chalk. Yeah, the 15-second chalk, not if like the 5-minute is the same as the 15 seconds and the 1-minute is the same. No, it has to give you the extra confirmation. That's the whole point, is the extra confirmation, right? So like I was saying, if this is a 15-minute and the 5-minute chalk, we can simply play on the 5-minute. right? But what you got to understand though as well is that when it's done a 15-minute chalk, you know, like your 4-hour demand zone, you got to refine it down now or just delete it, because if it's fully mitigated and there's nothing clean, there's no clean POI left, then you have to just delete it. But, you know, if it was a clean POI, then we just refine it down. Yeah. So because now you've refined down the 4-hour POI, right? Imagine something like this. Right now we've refined down the 4-hour POI below this 15-minute chalk, right? Because that's one of the rules that you got to do is like, if you have tapped into a 4-hour zone and you get a 15-minute chalk, make sure you refine it down, right? Because now that point of interest has now been mitigated, okay? By this, and this 15-minute chalk confirms that, okay? Showing us that it's done its job, like the orders have been mitigated and it's gone and like fulfill this objective, right? To take out a previous high, okay? So we refine it down. And what that means now is simply that we can take this entry from here as like the 5-minute rules, the entry model 1 rules, yeah? 5-minute range, 1-minute POI, 15-second chalk. But after this has happened, right, we can never now play 5-minute rules from here to here, yeah? We can't play 5-minute rules. We're no longer in this POI, right? Not even close, nothing. Like, and plus it's done that 15-minute chalk. So because it's done a high time frame chalk now, I can't like start playing 5-minute like rules. I have to start playing 15-minute rules, which is entry model 2, right? 15-minute bullish order flow ranges aligned with the 4-hour bullish order flow range, right? Pro trend. I'll talk about this after. But do you see how like the 15-minute now overpowers and or like takes over the 5-minute rules now? You can't play 5-minute. Okay, 5-minute is used for the 4-hour zones only. Okay, so that's another way that it's invalidated. Yeah. Let's see. So literally like the other thing is just the same, but if this is lower down into the POI like this is another situation that I've seen, right? So imagine that, okay, let's say the POI is big like this, 15-minute range is bearish from here to here, and then we get the 15-minute chalk like this, right? Again, it's the same as the 5-minute chalk as well. Again, so we can take this entry, yes, from here, because it's a 5-minute rules, entry model 1, 4-hour POI, that's fine. But the problem now is that people think like, yeah, you can still play it from like here, right? The 5-minute rules, but no, just remember again what I just said earlier. If the 15-minute has chopped, you have to refine it down now. You can't play 5-minute rules anymore after the first one. The first one is fine, right? But now it's broken again, second time, I can't play this, yeah? I can't play this. So in the, let me just pull up something in the entries. Let me just pull up this. Copy image. Oh, hold on. So let me pull up this and just show you what I've dropped in the entries section on Discord. So this is another, right? This is the other like example that you could probably get as well, is when you get like a 4-hour bearish order flow range or whatever, even if it's bullish or counter trend, that's fine. Still the same thing applies. Let's say 50-minute has chopped and it's 50 minutes coming bullish towards it. Yeah. Let's say we tap into the 4-hour zone, right? But the 50-minute bullish, right? So expectation on the 15-minute, expectation order flow is to do this. Yeah. So what that means is, like I said, I can take the first 5-minute chalk entry from here. I can take that one. I can take the second one, continuation, right? Because we are still very close to the POI, that's fine. And we haven't got a 50-minute chalk yet. Because if we had a 50-minute chalk over here, then obviously I'd have to refine down the 4-hour zone, yeah? But because there's no 50-minute chalk, I will not refine down the zone. Meaning like if 5-minute does its thing, comes back into the range, I can still take 5-minute chalks like this, yeah? The problem here is that 50-minute is bullish, right? And we have the 50-minute discount pricing over here. So what that means now is that if the 5-minute goes and does this chalk, right? The first one is perfectly fine to take, even if it comes down into discount. But then afterwards, now the second one, let's say this one comes into discount. For me to take an entry now, I would not take it. Yeah, it would basically become invalidated, right? Because of the expectation order flow is to do this. So it's just logical sense, yeah, to not take these entries. It's now come down into the range, into discount. For you to take an entry continuing this 5-minute flow is just illegal. Like, just don't do it. Okay. you could easily get losses on that if the 50-minute wants to do this. Okay, but I'd rather take these entries, okay, from here, take it down, and hopefully get 10R before it even gives you that reaction. Or it could give you a reaction, but then continue lower because of the 4 hour, because of the high time frame POI. Okay, so yeah, like this is, I think every single every single one of these like criteria is a situation that you could probably see yourself being in on the 5-minute entry model 1 scenario. So just in terms of just entry model 1, does anyone have any questions on just this first one? Pretty much going into very depth in here.
So you tell me you rather wait for the price to go like above this, for example, POI to take another 5-minute track, rather because like if it goes bullish, it's invalid, right? So
exactly,
you wait to wait over here, right?
Exactly. I'd wait for it to come back into the POI and then I'll take a 5-minute track again.
This is so fucking clean, bro. I'm so happy, bro.
No problem, no problem. Perfect. Okay. Just
sorry.
Yeah. Unmute yourself. Ask me a question.
So when it comes into so we got 5-minute track, we got 1 to 4 minute POIs. When the 15-second comes in, if the 15-second wicks it on the chalk, is that invalid? You'd wait for the next one below if there is one.
If the 15 seconds.
To say that you got 2 POIs in your 5-minute area. Yeah, the first one, if the 15-second like wicks it and then chalks. Yeah, say you got 2 POIs.
Invalid.
Yeah, so you wait for the next one.
Yeah, wait for the next one or a 1-minute chalk now.
Okay, cool.
Yeah.
That's what I guess.
Yeah.
Thank you.
Nice.
Hey man, I have a question too.
Yeah, bro, go on.
So if the 15-minute and the 5-minute have like a charge, but the range is not the same. So, for example, if the 5-minute has a flip zone, whereas the 15-minute was just a break.
Oh yeah,
so,
I know. This is your 15-minute, right? And it does this. This is your 5-minute, but this could be a 15-minute.
Yeah.
Yeah. Again, only I can take this trade from here with using the 5-minute rules. Yeah. Once it's broken this low, 5-minute rules invalidated. Now I have to play entry model 2 rules, right? Which is a 15-minute rules. 15 minutes is a bit different, right? I'll talk about this after.
All right, got you, bro.
Yeah. Do you understand? This is invalidated now, right? 5-minute has dropped bearish. So for you to even enter a trade, it has to come back into, like, let's say the 4-hour POR has now been refined underneath and now give you another 5-minute chop from here.
Okay. Yeah. All right. Thanks, bro.
No problem.
Hey, Cash.
There you go.
Oh, one quick question.
Sure.
If we are looking for the 1-minute chalk, do you look for the premium and discount on the 1 minute?
No.
Okay. And
only 5-minute. Only on 5-minute and 15-minute.
Okay, right.
Yeah. One thing as well is the 5-minute, the 70% rule. Okay, so let's say we have that, right? Let's say we have 5-minute bullish, okay? And we get like the 5-minute chalk, we get the 5-minute come down into the discount, we get the push away to the premium, right, 70%, and it fails to take at a high, right? If, right, in the process of doing this, yeah, it already chopped 1 minute like this, okay? If in the process of doing this chopped 1 minute, what I will do, I'll make sure that I'll get my POI as close as possible to the equilibrium and then take an entry from as close as possible to the equilibrium using a 15-second chalk.
Okay, so we don't have to ever worry about 1 minute premium discount and 50 seconds premium discount also. Okay.
No, the thing you have to just, and you don't have to worry about it like 1 minute coming down, like, bearish towards a POI, right? You don't have to be aligned. The 1 minute doesn't have to be aligned, right? Only the 15-second has to be aligned, right? Aligned meaning it has to be bullish always for you to buy. But the 1 minute can chalk, and this is your 1 minute POI. It doesn't matter if it comes down like this. It doesn't matter if it comes down like this, right? because we are waiting for 15 seconds always to be aligned. You see the difference, yeah? Yeah.
Yeah, I think so. I think so.
Yeah, so like price can come down, give you a 1 minute chalk, give you a 1 minute POI, and even if the 1 minute comes back bearish to this POI, that's fine for 15-second entry still. Or even if it comes down straight away, that's still fine 15-second entry. Make sense?
Yeah, because you anyways have to see the 50-second shot.
Exactly. Anyways, yeah. So it doesn't matter if, as long as it's above the first chalk, like the first 1 minute chalk, I can still take anything using 15 seconds in a 1 minute POI. Okay.
Okay, and what was the scenario once again where you said like the 15 seconds always have to align with
your entry? No, not with that 1 minute, with your entry. So your entry, you want to buy, right? You want to buy. So
Yes.
15 seconds has to be bullish. That's it. Always bullish. Meaning from this low to this high, it has to be bullish. It can't chuck from bullish to bearish now. Yeah.
Yeah, and
That's
if it does, we have to wait to come back bullish again.
Yeah, bullish again, and then you can trade.
Yeah.
It's very simple. All right. And repeat this if you want to sell. Like you want to sell, you want to do opposite way. So, you know, price has to go from bullish to bearish, right? For you to sell this trade, right? If it comes back bullish, because it chopped you over here, right? So now, again bearish for you to sell.
Okay, okay.
Yeah. No, you can't just enter from the 1 minute or something here. Just look at this 15 seconds bullish. It can just do this. It's just all the way. It can do that easy. Okay. So just make sure it's aligned with your entry. And what I was saying earlier is like when price comes into the 50% and pushes away, but if in the process of doing that, it actually gave you a 1 minute chalk in the process of doing that, yeah? Then I can use a 1 minute POI like this and 15-second entry.
Yeah. Okay.
Yeah?
But then we don't have to care about like that the 1 minute needs to do anything.
Yeah,
nothing. We're waiting until the 15 seconds.
Yeah, but if it were just to do this, like clean, push down, push up, right? Then I have to wait for this low to get broken, 1 minute chop to happen, 15-second chop to happen, and then take trade.
Okay, okay.
I'm just showing you every single scenario possible because I know in my head I can see like all these things that have happened and I know like all of these scenarios. It's trust me. At the moment, you might not understand every single thing, as in like you won't see in your brain, but I see them all, and you will see them going into the future, into the charts, into trades, into my end of day markups, everything. You will see all the different scenarios playing out every single day or every week. Okay, so
Okay.
I'm just showing you now so that you write it all down, and then when you see that in the future, you'll be like, oh, this is this scenario, so I need to wait for this to get just to get broken, this to happen, blah blah blah. You understand?
Yeah, bro. That's the real fine tuning, right?
It is the real fine tuning. Like I can't just, trading is not as simple as like, oh yeah, 15 minute POI, and then just take a 1 minute chalk and then happy days. No, it's not that easy. It's not that simple. It really is not. Like I've made it as simple as possible, but there is these small fine tunes that will save you many losses. And obviously you want to learn that, right?
Yeah, bro.
You don't want to learn like 20% strike rate or something. Yeah. So yeah, does that make sense?
Yeah, thank you.
Now it's Dr. J, Doctor.
What's going on, man?
Hey, what's going on? You okay?
Yeah. So I don't know if this is a little bit more relevant for like entry model 2 and 3.
Okay.
I guess whenever you get an entry model 1, 1 minute chalk, it might be relevant. But whenever we have 15-second internal chalks, I know we had one on Thursday's EOD markup. I can drop it in the chat.
I'm going to go into the trades actually, but you drop it anyways. Let me just see if I got the same one as you. Oh no, that's not working. That's not working. Don't know why. I'll just drop it in like chit chat. Okay. If you want.
It was entry 2 set up on entry model 3 on Thursday's EOD.
Entry model
Yeah,
3.
just drop this in chit chat.
Oh yeah, I'm literally gonna go through this.
Perfect.
Yeah, already gonna go with
Figured.
this. I know. Yeah, but it's not what you're showing me. It's not an internal chalk. It already was bullish. So all it is like where to actually put your placement of your stop loss and your entry. That's all it really is. So it wasn't
Gotcha.
more like just a random internal shit. It was actually like a proper chalk already happened. And then I'll show you. Actually, I'm gonna go into that after.
Gotcha. I got one more question too.
Yeah, sure.
Still on this diagram here that you got to the right.
Yeah.
So just imagine that this is like, as it's coming in, this is entry model 3. Since the 15 minute is still misaligned, are we taking that, premium PD tool there? So that way, if the 1 minute continuation order flow pops into that discount, then it's no longer valid?
The thing is, these trades are not even valid anyways because it's like 4-hour counter trend, right?
Oh, gotcha.
This is entry model 2, but
Okay.
counter trend, so it's like invalid for me because the strike rate on it has been like 18%. So like I'm not really interested if it's like that low, right? I'm more interested if it's above 40%. Right?
Gotcha. Because that example was on Wednesday's EOD, and I can drop that for you too.
Yeah, drop it so I can see.
It's like super close.
That one is a entry model. Wait, all of them are entry model 3s.
Correct.
Yeah, all of them are entry model 3s. That's different.
Yeah.
And these are entry model 2s. Like these are bullish order flow ranges. These are different. Yeah. Entry model 3 is like if it chucks this low, again breaks 15 minute and then comes back into that POI, right? Yeah. Entry model 3. That's that one. So none of these are valid because it's counter trend the 4-hour, right? But if it was pro trend 4-hour, like let's say 4-hour is already like bullish, and we're doing these 15 minute like this, I can continue to take these 15 minute, continue to take them, so like buys are valid, as in sells are valid because we're in a 4-hour supply. Yeah.
Sure. Yeah, this like model markup that I tried to highlight, that was a poor example, but in the chit chat, there's some good ones from some EODs this week.
Yeah, I'll go through like on charts if But what's the main question that you got on this?
Yeah, so as again, entry model 3, since it's coming 15 minute is going to be coming back in misaligned. Where is going to be your PD tool drawn to?
Always from your current range.
Oh, okay, perfect.
It's not from the
that's what I was trying to show on this. Okay.
Yeah, okay. Yeah, I get you. So let's say this was a 15-minute one.
Yep.
Bearish, but then it chucks bullish like this, comes back bullish to the 15-minute first range, right? The calls of a 4-hour pullback phase or continuation phase. Your premium discount tool is from here to here, not from here to some random low. Like it's not even a range, right? Perfect. It's always from your current range because you always want to be selling from the premium of your current range and then buying from the discount of your current range.
Perfect. Okay. Cool. Thank you.
No worries. Good question. Gringo.
Yo, what's up, man?
Yo, what's up?
What's up, bro? Listen, I have wrote on my notes something like this. 15 minutes and 5 minutes is the same range. We can play the 5 minutes. This is accurate or not? Because if we are in a 4-hour zone and we have a 15 minutes chalk, we need to refine the 4-hour zone. So how can we play the 5 minutes if we're not in the 4-hour zone?
If you want to play 5 minute and not in a 4-hour zone.
No, so what I'm saying, we are in a 4-hour zone and the 15 minutes and 5 minutes or the pro range is the same. So once we have the 15 minutes chalk, we need to refine the 4-hour zone. Correct?
Yeah, like this.
So yeah, exactly. So we can't play the 5 no more.
No, you can. The first time, yes, you can.
You can.
The first one.
Okay.
This is the first chalk, right? You can play this, but after the second one, you can't play this.
Okay, but is because it's EM3 or EM1?
No,
EM1 is also for the first one.
Yeah, it's still EM1.
For the first chalk.
Okay. I'm not talking about the first chalk as in like the 15 minute is bearish and then it comes bullish.
Yeah.
No, I'm not talking like this. I'm saying I'm saying the 5 minute and 50 minute is bullish, and it comes back in bullish.
Yeah.
It didn't chuck again 5 minute, right? It's still bullish, but we can still play this one because it's the first one, like the first time it's done the 5-minute chalk, so we can still take it, right?
Okay, makes sense.
After it's done the second one, you can't take it now because it's like the 4-hour zone is refined and the 15-minute has chopped, and now we play EM2, 15-minute bullish order flow ranges. Okay.
Awesome, makes sense. Thank you, bro.
Yeah, no worries. Any more questions? Let's see.
Can you hear me?
Yeah, I can. Yeah.
Hey, Cash. I have a question. What do we do if we can't find a clear POI on the 1 minute to 5 minute time frames? Do you wait for a 1 minute chalk before a 15-second chalk?
Yeah, I would do that. Yeah, it's the same like sometimes on the 15-minute time frame. If I get like a 15-minute time frame and no clean POI, I'd rather just wait for like a 5-minute chalk instead of like a 1 minute. Okay.
Yeah, makes sense.
Yeah, same as a 5-minute. If 5-minute bullish, we get no clean 1-minute POI, I'll just wait for a 1-minute chop because then the 1-minute chop will provide me a clean 1-minute POI. That makes sense.
Yes, thanks.
Yeah, that's it. Let me just check the questions. It doesn't matter that we would have counted a 15-minute order flow. Yeah, it doesn't matter. This will be posted. Yes, really helpful straight source. So when the 15-minute chops as well as the 5-minute, you don't play EM1 rules, you use EM2. No, you use EM1 on the first time, and then EM2 is like after the second 15-minute chalk. I mean, for a 15-minute like break of order flow. Stop loss placement and when to market execute after 15-second chalk might be good points as well, yes. If the 5-minute range has 2 POIs in a discount, price invalidates a flip, doesn't invalidate 5-minute range. But if the 5-minute flip zone is like a proper range, like this has like one candle bearish, one candle is inside of the range, and we have a gap. If this is a proper range and it breaks it, yeah, that's chopped bearish. So you can't take this trade, okay? Live examples, yes. For the 4-hour refinement after 15-minute chalk, do we need to find a new 4-hour POI or just below the wick? You have to find a new 4-hour POI. EM3 has to be pro-trend to 4-hour. No, EM3 can be counter-trend and pro-trend. You explained it to the last dude, yes. Did you explain EM2, EM3? Not yet. Okay, cool. Justin. Just.
Yo.
Oh, how's it going?
All good, man. Yourself?
Yeah, chilling, bro.
Related to the previous question, so we have a let's say we have a 15-minute chalk like it has done, I believe, on Saturday, Friday night for you, I believe, before the markets close.
Yeah.
So we've done a 15-minute chalk up. Yeah. If there's no clean 15 to 25 minute POI, we wait for a 5-minute chalk. Is that what you said?
Oh yeah, if there's no clean 15-minute POI, like it's all crappy, wiki, mitigated, nothing there valid, like then yeah, just wait for a 5-minute chalk, yeah.
Yeah, sweet. Yeah, I think it was on between Friday and Saturday, a few hours before the markets closed, actually, on 15M.
This is Friday.
Yeah, that thing. So that chalk up, yeah. So in this case, I don't know. There's not really a clean POI. The sum is already mitigated and blah blah blah. So I'm not sure. Yeah, so that's already mitigated, right? Those weeks.
This one.
Yeah.
Oh, you're talking about like EM3 entry? You mean like coming down later?
Yeah, something. So if there's no clean POI in this case, what do? We wait for.
I mean, right now, 15-minute is still bullish, but let's just say they continue bullish and comes back bearish somewhere here, then I'll just wait for 5-minute chalk instead of 15.
Okay, 5-minute chalk as long as it is in the discount area. Yeah. In this case, yeah.
Discount of this range coming back into this area, right? Below this wick, usually, most likely, yeah.
Yeah, that's what I wanted to ask.
It has to be below this 15-minute chalk. You understand?
Yeah.
Yeah. So 5-minute, because if it's nothing clean, use 5-minute.
Yeah.
Right? If it is clean, use 1 minute.
Yeah. All good.
Yeah.
Thanks.
Sick. Let me show you a couple of examples now. So in terms of like entry model 1, okay, I'll just show you this clean example that happened up here. So what we do is go into the 4-hour time frame and we mark up our 4-hour zones. We do have a 4-hour POI here, which is a clean demand to supply flip. You know, we tap into this demand zone, we give a reaction, we fail to break the highs, instead we break the low. Clean buy to sell wicks that got engulfed. We can use this for a future mitigation for our POI. Taps in, gives you a nice V-shaped recovery. Look at what happened on the 5-minute time frame. We come in on the 5-minute, right? Let me just hide this somehow. So we come in on the 5-minute and look what happens. Previous 5-minute range was this push down, push up, right? Takes that as high. So this is the low to get broken for a 5-minute chuck. So then the 5-minute chuck happens right here, right? This becomes your high, this becomes your lowest point, right? Pushes down and it comes back into the range. What do? We make sure we get the premium discount from the high to the low, right? Which is up in the 50% up here. So then we get to the 1-minute time frame just to find like a clean POI to sell from, right? Literally on the 1-minute time frame alone, it just showed us this clean buy to sell, engulfed POI, supply zone. Price comes perfectly into this, right? Clean push up. Like I said, we don't need any liquidation, nothing, right? Just clean, come into the POI, give you a 15-second entry like this. 15-second chucks happened of, yeah. So we take out the high. So this is your high that pushed down, took out the the high. So this is your nice sell to buy price action. This is a low to get broken because it was just one clean push. There was no flip or anything. If there was like a flip, you could just take the flip as a chuck. But there was no flip, so this extreme becomes your chuck. So you see how this high broke all the way down here. This is one range, right? It doesn't have to like break bullish to get back into here. So then when it comes back in, you can just simply take this trade, stop loss above the high, right? And in terms of stop loss placement and everything, I make sure my stop loss is above the high here, 15 seconds. If I'm playing 15 seconds, I do 15-second high. If I'm playing the 1-minute, you know, I'll just do 1-minute high. If for any reason that the 15-second and the 1-minute are like nearly the same or something like that, there's not much difference between the high here and the high on the 1-minute, like in terms of stop loss, I can get a small enough stop loss. I'll just cover both of them, right? Like if let's say like there's a 1-minute POI like this, and from here to here is like 0.3 pips or whatever, something small that can still get a good stop loss size, right? Below like 1.6, 1.5, you know, something small. Usually in London, the stop loss is like I can get like 1 pips to 1.2 pips or something. But in terms of like New York, because of more volatility, usually the stop loss size increase like 1.5, 1.6 or something. So as soon as I see, right, with my stop loss here, as soon as I see anything below 1.6, I click on sell on my market execute, right? Because you don't know if it'll fill you in deeper, right? I'd rather make sure I get filled in deeper when it's coming towards me, instead of like clicking sell like 2 minutes later or 1 minute later and it just fills you in here with like a free pip or something, right? So when it shoots into your entry, shoots up in, then you click on sell, right? Then whatever it fills you in, right, you just get filled, right? I got 1.6 as well, but yeah, like I'll show you all about like, you know, break evens and that. In terms of like how I got break even, simple rule is like if the 1-minute and the 15-second range is the same, I'll just wait for that 1-minute boss to go break even, right? Which is that low here, because this range over here, right? It was just the same as the 15 seconds, right? This 15-second push up and the 1-minute push from here to here is just literally the same range, right? Sometimes you get two separate ranges where you get like a 1-minute POI like this, right? The 1-minute has to chuck bullish towards it like this, and you see how the 1-minute and the 15 seconds is not the same range. 15-second has to do this instead. So 15-second has like a new range. So, you know, this is like completely separate price action to the 1-minute, right? But if the 1-minute is exactly the same as the 15 seconds, I'll just wait for the 1-minute boss and go break even, yeah? But when they are completely separate, like let's say you get this as a 1-minute range low, but then this is your 15-second low, right? Then what I'll just do is I'll wait for like 2 15-second bosses, right? Breaks of structure, breaks of order flow, whatever. Yeah, I'll just wait for 2 of these. So that's one, pull back, second one, and then I'll go break even. Yeah. And that's simply it. But there's the other thing as well is like if for any reason that price, like let's say this is my entry, and you know before like breaking this low, it left, it fully mitigated, and then it went and broke this low, for example, on the 15 seconds, or the 1 minute, whatever happens first, I'll go break even then as well. Yeah. If my full entry has been mitigated, there's no reason for it to be open anymore, right? Just close your break even to your entry and that's it, because the price has already done its job now. It's already mitigated and it's gone and broken something. Yeah. So I'll just go break even. So it's all about logic as well. You know, it's like you can't just like prices melting to the floor and you're still not even break even yet. Like it doesn't make any sense. Yeah. Like it's gone, done everything, it's melting to the floor and you're not going break even. Doesn't make sense. Yeah. So make sure you have these things in your planning, your rules that okay, if the 1 minute is the same, break even on the 1 minute, boss. If the 1 minute is different and the 15 seconds is like different like this, right? Your entry is here, stop loss here. Then I just wait for 1, 2 on the 15 seconds and go break even. And this is the 1 minute low. So I'm not waiting for this low to get broken. That's too far. That's like done 5 hours, 6 hours already now, right? I'll just wait for 2 of these to go break even. And like I said here, is like, let's say you enter and, you know, it comes down, it fully mitigates and then shoots down like this. Yeah, I'm going to break even. Yeah. Fully mitigate my entry. Okay. So it has to mitigate your entry and then shoot down, breaking like a low on the, you know, either 1 minute low or 15 seconds, you know, making sure it's like got enough, the space, the room is gone. Like you see, you seen that it's mitigating, it's done its job. And it's not just like, you know, doing this. If it's doing this, leave your stop loss open, right? Once it's like fully done its job, bang, bang, then go break even. Yeah. Simple. Okay. Let's move on to this one. Okay. So entry model 2 now. It's a very it's also a simple one, but it's just you got to look at liquidity a bit more. So in terms of 15-minute ranges, this is just following 15-minute order flow ranges, right? Pro trend. So let's say you got like your 4 hour is bullish again, right? And you know we're playing only pro trend, right? We're not ever taking these counter trend just because of the strike rate being low. If it was high, I would have taken these like counter trend like these as well. Sell, 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 sell back into this. But because of it being the lower strike rate counter trend, I only follow it pro trend now then. So I'll wait for it to come. It doesn't have to come into the 4 hour. It can just continue like this, right? And these are still pro trend because it's pro 4 hour, yeah, bullish. So yeah, we can still take 15-minute ranges like these, or we can wait for it to come down and then take 15-minute ranges like this all the way, keep going until you're wrong, okay? Or until you come into high time frame supply zone. And I've said it before, when price comes into high time frame 4 hour supply zone, you never ever should look for buys inside of this, yeah? Because we might see a bearish reaction. Same like a 4 hour demand zone, you should never be looking for sells inside of this because we might see a bullish reaction. Simple. Very simple rule, just stick to it. It's fine if it's taps in and goes away, then yeah, we can do whatever, we can buy from here, right? But if you're inside of this, don't buy. Yeah, simple. 4 hours bullish, for you to look for a buy entry, we just need to have 15-minute like aligned bullish. So let's say 15-minute goes bearish to bullish, right? Or it already was bullish and it continued higher highs and high lows. So let's say 15 minutes gone bullish, right? How can we take an entry from here? So again, so now it's all about, okay, we need to see a couple of things now. So now we're playing high time frame, chucks and a bit of a high time frame scenario. 15-minute range is pretty big sometimes, and what we want to do is find like 15-minute POIs. Again, it could be equilibrium. It could be it has to be below the equilibrium of the range, so 50% and below. Right, 70% rule does not apply here. It only applies on the 5-minute ranges. Yeah. The only thing that applies in terms of 70% rule on the 15-minute ranges is the liquidity as part of this. Meaning like, right, first of all, you get a 15-minute POI. It could be from 15-minute to 25-minute, for example. I don't want it to be any higher than like half an hour, like 30 minutes, 1 hour time frames and all that stuff. Because again, like we're trying to play 1 minute chucks. So 1 minute chucks is still lower time frame, right? You can't be playing 1 minute chucks from 4 hour POIs, daily POIs, weekly. Yeah, it's too big. Like it has to be relative, right? So again, you don't want the POI to be huge, like massive, right? You want it to be, you know, big enough to get the entry, but not not super tiny that you're playing 5-second chocks as well. Like, you know, it has to be all relative. Okay, so you get a nice high time frame, 15-minute POI, for example. And what we want to see before the POI is some sort of liquidity as like resting inducement for early buyers to get trapped into looking for longs right earlier on, and then we wait for the sweep of that them early buyers, right? We want to see a 15-minute demand zone here, like a bearish candle, sell to buy, right? We want to see a demand zone over here, basically, right? Basically, you just want to see like a 15-minute bearish candle, which could look just like, you know, let's just find one that's not a range. Let's see. All of these are ranges. Oh, so right here, right? See how you have this 15-minute bearish candle, right? Sell to buy, but it's not a proper range. It's not an order flow range, right? An order flow range is a proper high, push down, push up, takes the high, gap in the range. We have one candle in the range, one bearish as well, opposing. Even the first one is opposing, right? That's fine. This is a proper range. If it breaks this low, that's a 50-minute chalk, yeah? And if you're playing EM2, you want to make sure 50 minutes is always bullish, right? Or if you're buying, or bearish always if you're selling. You can't, you know, let it break 50 minutes to come into this, right? That's I'm going to cover in entry model 3, okay? But this sell to buy demand zone right here could be used as inducement to trap early buyers into buying from here, right? We're waiting for this low to get swept to then look for a entry in lower POI, for example, yeah? So this low could be used as liquidity inducement. Already gone through in the Zoom call last time, right? But if there's nothing before your POI, like let's say there's literally nothing here, it's all just imbalance, one clean push, nothing, right? What you gotta now make sure is this. You gotta make sure that the price on the 1 minute is coming down and generate liquidity on the way down, on the mitigation down, right? So again, trapping early buyers. So you see how I got the 70% line here. So this 70% line means that I don't want to see inducement being generated like up over here, like, you know, if the POI is down there. So how is this going to entice you to buy early up here, right? It's not. So what you want to do is make sure that you're seeing price come down on the 1 minute and it actually comes into below the 70% to generate liquidity. So it has to do it has to push down, and then do something below the 70% line. And what I mean by that is like it could either do, you know, equal lows, right? And then sweep them equal lows as inducement to come into this POI over here. Or it could give you a fake chalk on the 1 minute time frame. So this fake chalk will just be like a 1 minute chalk, which induces you to buy from here earlier on before even tapping the POI. Or even if it does tap the POI and it gives you that fake chalk, I'm still waiting for the sweep of that, yeah? So I'm waiting for the sweep of this low, which you can call a structural liquidity because it's a structural low in that sense of that this is the low that took our previous high on the 1 minute. So this will entice you to buy from here earlier on, yeah? We're not trying to buy from there. We're gonna wait for it to take out that 1 minute chalk low, right, as liquidity, and then take the next one that presents itself over here, right? And then take an entry from this 1 minute POI, right? So now we get the 1 minute chalk after the sweep of this liquidity over here, and then we take this 1 minute chalk, yeah. And then again, what do we make sure we always do? We have 15 seconds always need to be aligned in our favor, right? So again, we wait for 15 seconds to be aligned bullish. If it's not already bullish, we wait for 15 seconds, right? If it's already bullish with that 1 minute and it comes straight down, we can just take the entry, yeah? You can just simply take it. Again, making sure your stop loss is protected, make sure you got a good stop loss size, make sure you're doing your 10 out, break even correctly, right? So either take it from just the 1 minute chalk, come straight back down. If the 15 second is also bullish with this 1 minute, like it's also the same range pretty much. If not, then you have to wait for 15 seconds to go bullish, align bullish, and then you can take this trade. Make sense? Let me just show you. Let me just show you like an example, and if you got any questions, just let me know. So this is not like this example I'm just going to show you quickly is like it's not pro trend on the 4 hour, but I'm just going to say that imagine it is pro trend on the 4 hour. Okay, so imagine like 4 hour is bearish, right? Like here to here, and you want to sell, right, with the 15-minute bearish shock. So can you see how we get like on the 15-minute time frame, right? We get this high, it pushes all the way down, like all the way down to here, right? And then it pushes up, right? It doesn't take out the high first time, right? Pushes down. So this low then, right? This push down is the one that really ends up breaking the high, yeah? So remember the question from the order flow zoom is what flipped and broke the range, right? What really ended up breaking the range? It was actually this low, right? This sell to buy, this push down, right? Price pushed up here, pushed up, pushed down, give you that gap, give you the bearish candle here, give you the candle inside the range, and then it breaks the high, right? From this low. So then in terms of the chalk, would have to be this low for you to look for an entry for sell, yeah? So it's this low to here. So now we chalk bearish, 50-minute is bearish, yes? So now what do? We get your premium discount tool from here to here. And then you get your, I got my rectangle, simply shows me that there's no inducement, right? There's no inducement for the high time frame POI, which is on this 18-minute time frame, we get this wick, right? Get this wick here for me to look for a sell, but there is no inducement on the 15-minute, right? So that means on the 1-minute time frame, I need to see inducement generated, yeah? So what does that mean then? So as you can see, we get this no inducement on the left. So on the 1-minute time frame, can you see how we push in? We get this 1-minute break of this high, we get a 1-minute chop of this low, which I can call a fake chop then, because I don't want to sell from here, right? Because I'm expecting now for this high to get taken, right? So this high gets taken, and then we wait for a second 1-minute chop now. So whereas the 1-minute chop is over here, this high that flipped that broken range, yeah, this is what flipped and broke that range, and you just have to make sure that on the 15 seconds that this is aligned. And it was, yeah. So you see how this is this 1 minute and 15 seconds is bearish, and this entry right here. So bang, take the trade like this, for example. Oh, like 1 pip is huge, yeah. So like you can literally cover the whole 1 minute high, yeah. And just like that. So that's like a 1 minute chalk and flip actually. So you see how this is your demand zone right here. You see how we get this reaction and break, right? So we push up, we break it, we come back into it perfectly right here, right? 15 second was also bearish, aligned in the favor, same way. 15 seconds bearish from this high to this low. So I want to make sure that I'm entering below this low, right? So enter here, right? Stop loss above the high, and then this is the trade, okay? And this is, again, only making sure that you're with the 4-hour time frame if you're taking a trade, right? This one in real life was counter trend, but the same concept, everything applies the same when you're pro trend, right? It doesn't matter. But you just have to make sure that you're pro trend just to increase that like probabilities of like this, the high strike rate stuff, okay? Anyone got any questions on just this? Entry 1 or 2? Oh yeah, last time, last one, hold on. So also, if there was no liquidity before the 1 minute, like on the 1 minute beforehand, before this chalk, if there was nothing, the 1 minute liquidity can be swept after the chalk as well. So let's say there was no 1 minute chalk, there was no 15-minute, inducement, right? It can also be done afterwards. So let's say now this is your 1 minute chalk here, right? And let's say we have like this buy to sell candle over here, supply zone, right? So you can actually use this high here, this supply as inducement, as the liquidity to be swept into like a different POI above it, for example. Yeah. And then again, same procedure. 15 seconds have to be aligned bearish, and then we enter, just like here. So now do you have any questions? Okay. Yeah, go on.
Yes.
Yes, bro. El Pizarro.
Oh yeah. I don't know if you. I had to go to the washroom really quick. I don't know if you talked already about this. The liquidity has to be like in the premium or discount of the 15-minute range, or
70%. Yeah, above the 70%. Okay.
Okay, can be there anywhere. Okay.
Yeah, above this.
And also, it doesn't have to be the liquidity doesn't have to be like 1 minute charge, like factor. It can also be like a trend line or
Yeah.
trend.
No, it has to be, like it has to be either equal highs like this. It could be like this. Yeah.
Okay, yeah.
Trend line liquidity that
That's the
you're saying,
one.
right?
Yes,
And
yeah,
then
that one.
and then a 1 minute chop like that after.
Okay, okay,
Yeah.
that's my question. Thank you.
I'm gonna drop like I'm gonna drop a chart later for like liquidity types. Okay.
Awesome, thank you. Man.
In the source channels.
Good, good.
Yeah. No worries. Jameson.
Hey, bro.
Hey you.
I got a question. Let me draw something. Couldn't this be considered liquidity for the fake choke to be a real one?
This one, let's see, price types in. Yeah, you could do actually. Yeah, you could do. You could use that as well. Right. So yeah, you could take this as liquidity for this POI mitigation, 1 minute chock, and we could look for an entry. If it presented itself. Don't know if it did, but
I don't know.
it
didn't. Yeah.
Oh, I didn't take one. Yeah, okay. So it didn't give you a 15-second chock. So
Okay.
you could have taken it from there, but it didn't give you the entry. If it didn't give you the entry, we just have to wait for again another 1 minute chock, which is this to this, and then take 15-second aligned. Yes.
And second question, could this be a liquidity for the like this POI?
Yeah, yeah, yeah.
Okay.
Any buy to sell, like before your POI, yeah, this bullish candle, right?
Okay.
Supply zone can be used, even if it's structural liquidity, even if it's like a equal highs before it, or this supply zone like this, like this
Okay.
supply zone, like this one here, right? They can be used as like something to get swept, right? Like early seller to get swept before your actual POI, yeah.
Okay.
Um.
And I have
Any
a
more?
third question. If the 1 minute choke is too big, we
I'm
were
gonna-
talking about the rule of
Yeah,
taking
yeah.
first 15-second alignment, and then we should wait for 1 minute boy to get mitigated, or
Yeah. So that's what I was. That's what I was like gonna drop like as well later on. It's literally about like when you get like a big 1 minute range and it just chucks like this.
Yes.
And then you just enter like that. Like yeah, a lot of times that these hit like stop loss when the range is like so big, and it's sometimes even remember the example where the 1 minute was actually the same as the 15-minute chuck. Yeah, one time, yeah, I remember the 1 minute and the 15-minute chuck was the same. And then it does this little chuck like this, like at the end, and 15-second was like this to this. Yeah? And then this entry was a stop loss. It happened a few times. So this is something to pay attention to. I'm gonna drop it later, okay?
Okay.
When I get time, bro.
Yeah.
I'm gonna drop it, but
I thought about a rule like you take just the first 15-second alignment. If it fails, then you wait for mitigation of like 1 minute boy to wait for another 15-second alignment.
Yeah. Yeah. We'll talk about it later.
Okay.
Okay.
Yeah. That's all. Thanks.
No worries. Let me just read the chat. Really great was taking a lot of losses, missing all of this. Now it is so clear, thanks. Easy peasy. Every time Cash does entry Zoom, he gets better and better explaining it. No lie, this Zoom is insanely crisp in the sun. You can name it the source Zoom. First time I watched entries, feel it so clear. EM2s always play on a 15-minute extreme, then wait for a clean inducement. It's not just extreme, it's also an SD flip if it's in the middle. So, you know, like if you get a 15-minute like bullish, you get an extreme, or you get like a SD flip, like a little demand zone that broke the high, yeah. Interacted with the supply, flipped and broke. But this is not like a proper range. Like it's not a proper push down, push up, one candle in the range, gap in the pullback, bearish candle in the range. If it's not proper range, that's fine to just use as a POI. If it is a proper range, because if it breaks this low, that's a 15-minute chuck, you see. Yeah. So you can't actually then use this extreme POI if it's not entry model 3, which I'm going to talk about after. Okay. But in just normal entry model 2s, you can't take this then. Yeah. Can't take this. So let's see. hey bro, can you talk about how to take a 1 minute continuation if you miss the first one? Yeah, simple. Like if you miss this first one here, you just rinse and repeat the same thing again. Like this is your 1 minute break. You find your 1 minute POIs, making sure every time you're above the premium. Yeah, you're always above the premium. So then, right, like as long as 1 minute does this continuations like this, you get 1 minute POIs, 1 minute POIs, making sure you get 15-second trucks. Yeah, just make sure you have 15-second trucks. Like if again, like if the highest probable thing to do is again always waiting for this 15-second truck. But sometimes the 1 minute and the 15-second is also aligned bearish, then just simply entering from like this is also valid to do. Okay, so the continuations is very easy. So like now, can you relay the EM1, EM2, the current US30 price, because price went into the high time for demand, and both the 5-minute and 15-minute chuck, they are multiple 5-minute ranges, but still only one 50-minute order flow range. Yeah, it's very easy. Like, you know, the current price action, you're saying if the 15-minute, like I explained earlier, that 50-minute chucks here, if, for example, this was the same as a 5-minute range, like from this low to the high, and it comes straight back down from a high time frame demand zone or something, right? We can just play the 5-minute range, like go into the 5-minute, where is it? It's actually from here, right? So this is your push down, push up, right? Gap in the range, in the pullback, one candle bearish, one candle in the range. That's fine, yeah? This is your range. So just because it's done a 50-minute chuck, but it's also done a 5-minute chuck, this is your range. If it comes into this 5-minute range, we can play the 5-minute rules, the 1 minute POI, 15-second chuck, simple, yeah? If it was to not break this low, we have to then jump out back into the 50-minute and be like, okay, where's my 50-minute POI? You start finding it and be like, okay, I'm going to play only EM2 now, right? If I'm pro trend 4 hour. If I wasn't pro trend 4 hour, I can't play EM2 either. What I'm going to do then? Wait for this to get broken, right? Because if I can't buy, if my 4 hours bearish and I can't buy, then I'll wait for it to go bearish and look for sell maybe, yeah? Or I'll just wait for the 4 hour to, you know, come back to mitigate the 4 hour demand supply zone, I mean, and start looking for sells like that, something like this, right? And let's say, you know, prices come into your 5-minute, right? Let's say we take an entry, let's say, you know, whatever, like, remember now the 4 hour zone is like below this low, right? And you've done a 50-minute chop. You can't now continue following this 5-minute, yeah? You have to jump onto 15, yeah? So obviously 15 is still the whole same leg, like it's still the same range. So as long as you know you can get 50-minute POI, you know, you can get like, obviously this wick is not a, like not really, what's it done? Nothing, yeah? Like it's just one candlestick. I can't just use this wick. It's done nothing, yeah? Like I'll be looking for something below. If there's something clean, I don't know. Probably not. If there's nothing clean, then we're gonna use like 5-minute chucks to try and get an entry from like this area, yeah? 5-minute chuck here. Just because normally we would play 1-minute chuck here, right? But if there's no clean 50-minute POI, I'm gonna take a higher time frame chuck, 5-minute or something, okay? Amazing session. Cash, have to go somewhere. We'll look at the recording again from the start later today. No worries, man. Take care. So does that make sense, Casper? EM2 is always play on the 15-minute extreme, then wait for clean inducement. I just answered the question, bro. I just answered the question, bro. What are you saying?
I have a quick question. Sorry on that.
Yeah, sure.
So if you're pro trend, so say the 4 hour POI it came into as pro trend, and you break that 15-minute range, your EM1 just switches into EM2, and that's fine as long as it's pro trend.
Yeah. Anything that's pro trend 4 hour, you can play that EM2 as well.
Yeah. So yeah, okay. I just want to clarify that it comes into that unmitigated POI. We're looking for EM1. It breaks a 15-minute. We can play EM2.
Yeah.
All right, dog.
Yeah, and even EM3 now. So I'll talk about that.
Yeah.
Okay. So EM3, right, is simply this, right? It's simply this, but the only difference is that when you have EM2, the 50-minute has to be bullish. When you're looking for buys, it has to be bullish, because if it's not bullish, then you're against the flow. But the only one time there's a couple of ways to just play EM3, which is like this. So you know how there's two phases. Well, basically there is like three phases if you want to separate them. There's three phases of like a range or a market. Like in terms of 4-hour range, there's three phases, right? You have like your impulse phase, right, which is impulsing out of the range to break the high, for example. So this is your impulse phase, and then you have a correction phase, yeah, which is correcting or retracing back into the range. And then what do you have? A continuation phase, yeah, to then break the high, right? So you know you can call it two phases again, like impulse, like an impulse correction, impulse, but it'll make it easier if I say continuation, right? Because EM3 can only be played in the continuation or the pullback phase, okay? So let's say you have your 4-hour range is bullish, and then what we can do is do this. We can take a sell from up here, like let's say 50-minute chop's bearish. Taking this sell directly with the 50-minute line is called EM2 counter trend, right? But EM3 is a bit different. EM3 is like 50-minute continues bearish and then breaks this high bullish to come back into this supply, yeah? So you see what happened now. 50-minute was bullish, it goes bearish, it continues bearish from here, and then it trucks bullish. But one thing you got to pay attention to is that price has not now mitigated yet the equilibrium, right? The discount. So remember what I said earlier, if expectation order flow is to do this, a higher high, then why would you want to sell from a weak high, right? You don't want to be doing that. So this would invalidate an entry from EM3 if this has happened, okay? If it hasn't happened yet, we can still play this supply zone, which is inside of this first 50-minute chalk range, right? That's the key, is that the first 50-minute chalk can still be used, okay? The first 50-minute chalk of the 4-hour pullback phase or the 4-hour continuation phase, right, from 4-hour going bullish, can still be used as an entry POI, right, point of interest. So even though 50-minute chalk's bullish to get back into this, we can still play the entry model just like this, how we've done it on entry model 2. They're exactly the same way, right? Meaning like 50-minute inducement, which a lot of times can just be this structural liquidity on the 50-minute, or if it doesn't have anything, you know, before this 50-minute POI over here, we need to make sure that 1 minute generated inducement, exactly what I just showed you earlier, right? And then we can take this out, right? Again, same procedure, other way around, is like when you have the first 50-minute chalk bullish, just like this, and it continues bullish, and it comes out bearish, right, to this first demand zone, right? So first supply zone, demand zone. Again, exactly the same. What I just showed you here is now in reverse, where you can get the inducement before this POI, right? Either it's the structural liquidity or it has to be a demand zone before this POI, for example, right? Or structural liquidity on the 50-minute before the POI. If nothing at all, if this is like up here, for example, like, you know, really far away from this POI and there's no inducement at all, right? Like close to the POI at all, nothing, then what I'm going to do is make sure the 1 minute time frame generates liquidity, just like this. Give me a fake chalk or give me like a equal lows or sweep liquidity after the chalk itself, like I showed you earlier, you know, after it's done the chalk. So this is like where is it? So let's just imagine yeah, this is a 1 minute chalk, and instead of like, you know, using this as a POI, we could use this as a POI and use this as inducement. Come in and then take a 15-second entry from there. Okay, so the inducement comes after the chalk. It doesn't have to be before always. Okay, we just want to see something get swept. It just increases the probabilities of the strike rate, the win rate, everything, right? So an entry in terms of like an example of this, literally there was one right here. So hold on. So as you can see, 4-hour was bullish, this low to this high, yeah? 4 hours bullish. So expectation order flow could be to do this, right? To make a new high, and that's what happened. But what happened when price came down, right? remember as well, this 50-minute for this entry model like this, right? It doesn't have to be in a discount, right? It can literally be all the way up here, right? It doesn't have to be. It just has to be the first one that causes the continuation phase, okay? So what's the first one that causes the 4-hour continuation phase? This low, right? Before it took out this low, this is the high that needs to get taken for you to be considering anything down here as like a POI for the first shock, right? The first 50-minute bullish order flow range shock. So in terms of like, you know, what we do now is, you know, price came down, mitigated your POI, you know, on a different time frame. We look for an entry, yeah? Remember, 50-minute went from bullish to bearish now. So what you need to do is like, you know, make sure like if you have a POI, does it have inducement before the POI? This low is inducement before the POI. I remember the POI is like huge. But yeah, you got to make sure there's inducement before it. If there's nothing before it, then you have to wait for the 1 minute to do something, right? And what can we see is, you know, after it's done all this, you know, it's done all this, right? It still hasn't taken out this high, yeah? You can always play this as long as it's not taken out the actual 4-hour high, yeah? You can always play this entry from down here, right? So even if it's done all of this mitigation, if it's like, you know, just in a little one here, whatever, you can still play this, right? After it's broken this 4-hour high, you can't ever play this now because this is now become part of a 4-hour leg, yeah? Like the one that happened here. This is part of that 4-hour leg impulse phase. You can't play that. So you got to remember, it's either the pullback phase or the continuation phase. That's it. So again, like price came in, shot away, broke 50-minute highs. We can refine it down, right? I think there was what time frame was that? 18, yeah. So 18-minute, we had a wick which was unmitigated, and this low here could be used as structural liquidity on the 15-minute time frame, right? You could use this low because it took out this high. So now it's swept that low. So what we can just do is simply go into the 1 minute, make sure you get a 1 minute choke, which is simply it takes out this low, right? Push up, push down, takes out the high, right here, wicks it, right? And then it comes down. So obviously when it wicks this 1 minute high, what we're going to do, we're going to find the 1 minute POI, right? And we actually have two. We actually have this extreme and we have this flip, right? Sell to buy, wicks. So price mitigates the POI. We go into the 15 seconds and what do we see? 15 seconds. So obviously this was your high, pushed back in. This was the high to get broken, right? And then, you know, it doesn't have to chuck bearish to get back down. So you can just simply take a trade. Yeah, just simply take a trade, just like comes down. You click on buy if you get a good stop loss. Stop loss below the low, right? Take an entry, stop loss, yeah, clean. Yeah, it is. So obviously this was the first entry, which, you know, was like a loss right there. Clean, simple, no problems, whatever, right? What happens next though? Still on the 15-second time frame, still, because now we've tapped into this 1 minute POI refined at the bottom, the extreme, right? So remember I had two. I had the extreme, I had this ST flip, right? So it's completely destroyed the flip now, right? So I delete this, and then it comes into the extreme, and it shoots away, proper V-shape recovery, proper nicely done, right? Takes out liquidity on the 1 minute time frame, everything clean, really nice. So shot away, showing us that strong BFI intentions to go higher. So we're interested to look for buys, and this is like, what time is this? This is 20 minutes after New York Stock Exchange open as well, so it's like a good time as well, like all good. And all this entry is about now is like, again, same procedure. 15-second chop is where it takes out this low, takes out this high. This is a 15-second bullish range, right? So all we're trying to do now, come back down and take an entry like this, right? But you see how big the stop loss is? Nearly 2 pips, basically 2 pips. So I'm not interested to take 2 pips, yeah? I'm not interested when I know like most of the time I can get a smaller stop loss. So I'm happy to miss some trades if it's going to be bigger stop losses, that's fine. And then, yeah, like I'm not going to take it. So what I'm going to take and what I'm going to do instead now, I'm going to think about like, how can I decrease my stop loss size? How can I get a bit of a better, smaller stop loss? And the only reason is what you got to make sure now is like, I remember, I think this was a POI to get mitigated on the 1M. So what you got to pay attention to now is like 15 seconds is bullish anyways, right? So it's all about where to enter now, right? It's all about how can I enter, how can I get my stop loss protected? And this low is the one to get protected, right? But you see how it's come in, right? And it's mitigated your POI. It's now gone and broken this high, which, yeah, you can say it's internal, but I don't want to say it's internal because, again, that confuses lots of people and it's not really internal, really. If you think about that, this is still 15-second bullish range. It's not really about taking an internal chalk or anything. It's just about how can I get my stop, my entry in like a, where can I put my stop loss now? Can I put it below this low or this low? So this low is the first one, but then it's done this like bullish chalk here, right? This buy to sell takes this low, takes this high, clean range, right? And then it's like, okay, so I can actually cover my stop loss below this low instead now, instead of that one there. So I can cover this low, right? Because it's broken this previous high and it's mitigated the POI as well, right? Really, really good. And then I can just simply enter this trade when it's come down. Yeah. So I enter this trade and then this is the one that goes for 10 off. Yeah. So that's entry model 3. Yeah. Any questions? Any questions? This is like a 2-hour call, bro. Holy crap. Dameson.
Yeah, I have
Hey,
a
mate.
question.
Oh,
Dameson.
okay. I have a question about the liquidity, structural liquidity on the 15M. How far is too far for the 15M?
In terms of in this scenario, you mean
let me draw it. I think it's gonna be better. When you have like a first 15M chalk,
yeah,
and then it continues like this. Is this too far for this POI?
I see what
can you use the PD tool to like 70% is right here?
Yeah, so you're saying like from here to here.
Yeah.
Let me just So yeah, this is exactly the same as before. So like price pushes up, right, pulls back and breaks again. So this low to this high is your range. Yeah, it was your previous range, right?
Yeah. So
the liquidity inducement needs to be below 70%. Yeah, because the POI was like, I remember it was quite a big POI.
Yeah.
So it was like this big. So this inducement for this POI was like good enough, right? But yeah, like if it wasn't here, if it was like higher up, then it wouldn't be good enough. No, it would have to generate 1 minute liquidity inducement in the coming down to mitigate. Make sense?
Yeah, makes sense. Thanks.
And that's it. So yeah, cool. Gringo again.
Yo again, man. Bro, I'm going through my notes, this EM3, and before starting the call, I wrote something down, but everything 70% is clear, bro. So I had wrote down that EM3 usually takes out 15 minutes structural liquidity before 15-minute POI. So this was not clear because I was thinking that 15 minutes needs to be aligned, for EM3, but in reality, it doesn't need to be, right?
No.
Fantastic. So this is done.
Only EM2.
Only EM2. Fantastic. And then I have something else wrote down here that it says EM3 valid only after 2 15 minutes order flow ranges. What does that mean?
EM3, sorry, say again.
I have wrote down EM3 is only valid after 2 15 minutes order flow ranges.
Oh yeah.
What does it mean?
That's basically true, because if you think about the first one, you can't have the first one if there's no second one. do you see what I mean, right? wait, hold on. So you see how like the first one, it can't be first if there's no second. Right?
Oh shit. Okay.
because if this first one is coming down bearish, as in it's still aligned, right, bullish like this, right? But it has to then break another one. But there's another scenario. The other scenario is like this: you get a 15-minute chuck and flip like this, yeah. So this is your 15-minute range.
Yeah.
This one is also EM3.
Yeah.
Yeah?
Yeah.
So
Makes sense.
it looks like this, where it breaks, pullback breaks again, or it's already done a flip and break before. So then this is a chalk. So this is now misaligned, right, with your entry because you want to buy, but because this was the first one, first chalk, right, first range, and we are bearish coming towards it, you can say that, okay, this is inducement for this one.
Fantastic.
So it looks like this or it looks like this, okay?
Yeah, awesome. Thank you so much, bro.
Yeah, no problem. Justin, yo.
Yo, can you go on the 15-minute example we saw before on the real chart? Yeah, on the EM3 that we showed before. Yeah. So let's say, okay, so in the beginning we had that big chalk, yeah, on 15, big chalk bullish here on the left.
Yeah.
So we had this. So now, let's say we had, hang on.
What we're saying.
So let's say instead of this whole bullish leg, what's happening? Yeah. We had a flip here, yeah, with another range. Okay. So in that case, of course, after it broke again bullish, so it became an EM3, right? What if it didn't broke bullish again and it came back down? That wouldn't be EM3 anymore, of course. So that would be a sort of EM2 or just a bullish chalk, let's call it.
Yeah, EM2.
But then in this case, since it's not EM3, we count the range from the flip, correct?
Oh yeah. If it was to break down, it'd have to come down, and that would be EM3, yes.
Okay, so yeah, so let's say if we have in this case we have a flip, yes, it's not an EM3 yet, so it didn't break bullish again, yeah. So it's an EM3, it's an EM2. Sorry, we count only from the flip up, yeah. Instead, if it broke up like it did, creating an EM3. We could count.
Hold on. You're saying that this break to this has not yet created the EM3, but it has, because like I just explained to Gringo there that you get a 15-minute chop and flip like this. This would be your EM2 trade, but if it was to break this low and come back into this one, that's an EM3 trade. That's what I explained to Gringo.
Okay. Yeah, exactly. But it needs to have another bullish break at the top, yeah?
After the chop. That's one sort of way that it can look like, right? It can either look like this one clean impulse, breaking the chalk, and then push down, push up, and break it, making a second one. That can look like this one time, right? It can look like this, or it can look like this, chalk and flip, right?
Okay, gotcha.
One time, and then coming down after that, yeah?
And it's always EM3.
Yeah, this is EM3 here. Not
so it doesn't need the extra. It doesn't need the extra break like compulsory.
No, if it's done this one, then no, it doesn't. Yeah.
It doesn't need to.
Yeah. If it's just done this, then it needs an extra one, and then it breaks bearish. You see?
Yeah.
Yeah. So this one, obviously, what happened in this real chart is that it broke, and it broke again, right? Because there was no flip here. Yeah. But if there was a flip here, then it doesn't need to break again. It can just break this low and then come down into this one.
Yeah.
And that's EM3.
Okay. And we will count EM3 anyway. Yeah. Okay.
Yep.
Yeah. All good, man.
All good. Right on. That's like Picasso artist. Yo.
Here, listen, I just have a quick question, bro. I just came, my internet cut out. Did you went over continuations and when it's invalid on entry model 2 and 3? Because I just seen on the first one.
Yeah. So entry model 2, like there's only, well, everything I explained on entry model 1.
No, I will rewatch it. I just want to like ask you, did you went over continuations on entry model 2 and 3 and like when it's invalid?
Yeah, I'll quickly just say to you now. So entry model 2, like I said, it's just 50-minute bullish ranges, yes? 50-minute bullish, buy. This is the continuation that we're taking, making sure you're always in the discount of the range, and we're taking these trades. As long as we're in a discount and you get 1-minute chocks like this, we can take these 1-minute chocks and 15 seconds chocks in these 1-minute POIs, okay? We can take them, right? That's continuations, and entry model 3 is exactly the same, but The only difference with entry model 2 is the 15-second, the 15-minute is bullish to look for buys, but entry model 3 is when you get the first 15-minute chalk, but then it doesn't come down bullish. Like you see how it goes from bullish to now bearish, yes? And then we can take this trade as well from the first one, because this is the first 15-minute chalk of a 4-hour pullback phase or continuation phase. Yeah. And that's it. And in terms of looking for continuations, it's the same thing with the 1 minute. It's like as long as you get like, you know, clean 1 minute chalks and 1 minute POIs, we can take these. Yeah.
Okay, so I need another 1 minute chalk so I can take continuation.
Yeah.
On the tree.
And 2.
Oh, okay. And when
All of
does
them.
it become invalid entry model 3? Because entry model 2 is like obvious, it becomes invalid when it goes in another direction. But what about entry model 3?
It's invalid when price has now, like, let's say, okay, so you know how like you got entry model 3, like 15-minute
Yeah.
15-minute again, and what you got to do, 15-minute bearish. So you see how this is your 15-minute range, this is your premium discount, you see?
Yeah.
So you can look for entry here, right? Entry model 3, right? From here, we can take these trades, right? But you see when price is above this premium, right? We don't want to be buying up here. Okay. This is your bearish 50-minute order flow range. You don't want to be buying up here, right? It can be in the equilibrium, yeah, it can be a bit lower, well, that's fine, but just not up in this 15-minute
so it's all about premium and discount. Okay, I got it right now.
Yep.
Okay. I appreciate you, bro.
No problem, bro. Let's see. If it does break again, the flip zone can be played as EM3. No, like it's just the first. Like you can't use another range for EM3. Like EM3 is literally only below this first chalk here. You can't start using this one and then this one. Like no, like EM3 is only this first one.
Yeah, but what I mean so when the prior question, if it comes and then it makes a valid range on the flip on the chalk, and then it breaks again, is this not EM3 playable?
Yeah.
Yeah,
Anything
okay, cool.
below that range, that first chalk, that line, anything below can be used as a POI for EM3.
Yeah, so before this break, EM3 comes down below.
Before this, yeah. Before this break,
Yeah.
Yeah, these are POIs to use, and then this is a break and comes down bearish, and yes, we can then play this and this.
Yeah, but then after this break up top here, this one, this is your EM3 zone. If it then breaks down here, it's completely different. The order flow is fucked. I think it's changed.
What do you mean order flow's changed?
Because this would be 1 break. This would be 2 break. So if you come down here, this would be the inducement you want. But then if you break, sorry, I've got so many fucking lines. But if you then take this low.
Oh, take out this low.
Yeah, then
we might have a POI here though.
Okay, so then it doesn't matter if we've got this break and this break.
Yeah, it doesn't matter. It can break a million. It can break a million times as long as it comes back into this first one. I can still take it.
Ah, okay, cool. Yeah, that's a prime example. Sorry. All right.
Yeah. No worries. All good. Can you explain very quickly about the counter trend entries we are not taking anymore? It's simply just EM2, but counter trend 4 hour, right? So like, you know how 4 hour is currently bullish over here. So let's say 4 hour is bullish like this, right? EM2 is simply following the 15-minute bullish like this, right? Bye, because 4 hours bullish. This is EM2 pro trend. EM2 counter trend is when you get 15-minute chop bearish like this, and you're trying to sell, right? 4 hours bullish and 4 hours bullish, and 15-minute is bearish. So this is called counter trend, 4 hour.
So what about the very first chart bearish? We are taking down or not?
No, only if it's EM3. And EM3 is different. Remember, EM3 is when it's not aligned. EM2 is when it is aligned like this, right? When 50-minute
Yeah,
bearish.
yeah.
But
But still,
EM3,
EM3 will be a pro trend with EM2.
no, wait, say again.
Sorry, but that will be like still pro trend, like because it's EM2, but it will be EM3 at the end. But still, like will be buying because 4 hour is bullish.
Oh yeah, yeah. If 4
Yeah.
hours bullish, and it is a 50-minute chalk and 50-minute like this, and then breaks 50-minute chalk bearish, you can still take this first one, right, as EM3.
So we are not, But for example, in this example, we are not taking anymore like the very first charge bearish, like the very first pullback trade. We're not taking.
Oh
anymore,
yeah,
right?
yeah, no. So like up here, right?
Yeah.
If it just does a 50-minute chop, no, I'm
Yeah.
not taking this.
Okay. Okay, that's my
It
question.
has to
Thank
do
you.
like this now for me to take it. Yeah. Bearish, bearish, then bullish, and then take this trade like this. Okay.
Okay.
So counter trend 4 hour is like all of these sell, bearish, 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 bearish. All of these. I'm not taking any of these anymore. Okay.
Okay, sounds good. Thank you.
Yeah, no worries. We should end it here. We've done a lot today. Done a lot, bro. So if I understand, we play EM3 if the second EM2 range gets broken. Yeah, like EM3, like I explained, it's just the first chop, the first range that got broken on the 50-minute bullish, right? Like this, demand zone. Even if it breaks bearish like this, we can play this one. Or if we are from bullish to bearish counter trend 4 hour, we can take this supply zone up here above this 50-minute range, right? So breaks bearish, then bullish to come back into this. We can take this sell, okay? And hopefully that makes a lot of sense. Like,
Cash.
yo.
Cheers, that mate. I got to shoot. All right.
Oh, perfect. No,
Top
no
man,
worries,
no,
mate. No worries. Appreciate it. See you
Order
in a
mark.
bit. Take care.
So simple, bro.
Hey,
So simple.
love that. Love that. Does anyone wanna say
Yeah,
anything?
EM3 is definitely the most confusing one, yeah, or was at least.
Was okay.
Because he would.
That's okay. At least it was, not anymore. Great session. Cash, thank you for your call. You're a legend. Thanks, bro. Cash, nice call. Amazing call, Cash. Appreciate you putting in the time. We got entry model 1 and 2, and where we have to play those entry models, I mean they're POIs, but please let us know POIs where we have to play EM3. It's the same as EM2. So like I said, anything below this break, any POI in this range here, ST flip, extreme, right? I've done a zoom for it all, like for the POI selection. So therefore rewatch it on the video on the website. Okay. And it's the same, right? Below this break, take the POIs from down here, and we can play the same as EM2 entry model, but down here. Okay. Cash. So for EM3, we do not consider 4-hour range. We just need M15. Yeah, that's right. So we don't need 4-hour POIs or anything. We just need to make sure it's like the first 50-minute chunk of the 4-hour continuation phase or the 4-hour pullback phase like this. That's it. We don't need no like 4-hour POIs here or here to mitigate. We don't need that. Okay. Off topic, are we getting the weekly stats today? I'll double check. Okay. DBS just has like COVID, I think. So I'll ask him. Yeah, basically every 15-minute, 25-minute valid POI under the chopped line for a bullish chop. Yeah, that's right. Thank you, Cash. Profound work. Will this be on the website later? Yeah, should be on later. Okay, so I'll end it here, right? It was a great session. Literally, I just go off the top of my head, like top of the dome. Everything's all like muscle memory, you know. So yeah, like I'm gonna upload it. Just make sure you rewatch it, write everything down. You know, scientifically proven if you write things down that if you can retain the information like 70% more. So why would you not? You know, like, you know, I know some people don't like writing, but trust me, even if your writing is like rubbish, but just from writing it, you will like gain better understanding and information and retaining it to your brain that you could get that muscle memory. You know, like what to do, what to look for, have it in a plan, and then like train your eyes on it, go and test it, go and look at all the models, go and look at all the price action from the previous months. You know, train your eyes, and then you can do it in live markets. Like you know, after you like back tested it, you forward test, live test, you implement it, and you know, take it going forward. Okay, so yeah, I will catch you all later then. It was a good call.
Thank you, Cash.
You're welcome.
Mate, thank you.
No worries, mate. Take care.
Hey, Cash, can you explain 4-hour ranges, bro?
Yeah, I'll kick you out right now, man.
Is it 2 candles or 1?
Nah, man, it's about 10, bro.
All good, bro.
You
All good. Nah, big love, bro. Big love.
All love, bro. See you in a bit, man. Take care.
See you, bro.
See you later. Bye, bye.